Hello and welcome to the Friday, February 7th, 2020 edition of Tesla Daily, unofficial Tesla podcast. My name is Rob Maurer. Today we have a guest on the program, Matt Joyce, on Twitter at MattyMogo. How you doing, Matt?
Good. How are you?
Good. Thanks for coming on as always. Always nice to talk to you about Tesla.
Yeah.
So we put the call out yesterday for some questions from Twitter. So we're going to get to a few of those today, as many as we can. I think we got about 30, 40 minutes here to go through some things. So if you see us looking over here, that's kind of where we have our outline if you're watching the YouTube version. So I think we're just going to start off with, it's been kind of a few crazy days here for Tesla. So just talk about kind of how we're feeling, kind of go through the outlook for 2020 and then get to some of that Twitter stuff.
It's been crazy.
Yeah. What's your reaction to the last 3 days of Tesla?
Man, it is just FOMO.
FOMO
on the way up, FOMO coming back down. Just crazy.
So we should talk about that.
Yeah.
And maybe that's a little bit earlier than what we had planned, but people on Twitter had asked about options. Mm-hmm. And we both are in options to various degrees, and it's something that I talk about on the podcast at times. Yeah. I try to avoid it because everybody's strategy is different. So I don't want anyone, following my trade or Matt's trade or anything like that. Everyone should have their own, risk tolerance, investment strategy. And it is highly variable. So when we talk about these things, don't take this as any sort of advice, and that's, consistent throughout everything that I talk about all the time. But you were in options. I've been in options, specifically call options for Tesla. And do you want to talk a little bit about your position and kind of why you've had it and how it's changed?
Yeah. So first, the very nature of options, whatever you bet, essentially, you have to be willing to lose it all, right?
Yep.
And for me, I've followed the same strategy from 2006 for a decade, just put everything into Apple long. And then whenever it would get cut in half, which happened a few times during that stretch, then I would get greedy. So either
and you're talking
load
just stock right now, right? Originally?
Whenever Apple? It would get whacked, then I would either try to load up long, or if it really got hit hard and you're just how is this happening? Nothing has changed with the story or how the business is doing. Then I would dabble in some options.
Even with Apple?
Yeah, even with
okay.
Apple.
I didn't realize that.
Yeah. So my best Apple options trade was right before the iPhone 4 kind of China mania. So it got absolutely whacked before that. And then what I do is I just buy the furthest expiration call options that I'm leveraged, but I have the least chance of being wrong because the timeline is as long as I can possibly choose. And then, eventually just sold everything. So I don't believe in diversification. I believe in knowing something extremely well that is world changing, that you're passionate about, whose products you love. And if it checks all those boxes, just go. I believe that I should go all in, and then eventually built up a 6-figure stake in Apple by the time I was 22, sold it all, then put everything into the garlic dip, so Tomb, and then now I've just been paying myself enough just to get by and basically cover my expenses, because the more I pay myself, the more the company bank account dries up, and food is a really expensive game. So you got to spend a lot of money. It's a hyper growth game, especially when we're first mover in the market. We've got to move super quickly, spend a lot of money, grow as quickly as possible, get market distribution, penetration, hopefully saturate that market and become the Nutella of the category, where you're just synonymous, kind of like Tesla with EVs right now. So I've only been able to save a small amount of money. So that small amount of money, instead of buying long, I would like to leverage it. And that's why I've been using call options. So bought 3 different options probably 6, 7, and 8 months ago. So yeah, it's been good.
Yeah.
It's worked out.
And this is a great point about everyone's financial circumstances being different, because with that small amount of money, the risk of losing that small amount of money is pretty small. If you lose that amount, it's not going to impact you too much. Mm-hmm. But the upside with an option in that situation is much more significant than with the stock, especially if you're looking to maximize your return over a very short period of time. So in that situation, kind of makes sense. But say you've got a significant portfolio and you're, thinking about putting half of that into options, like you can lose it all very quickly. Like
Yeah, definitely.
think about Tesla in 2019. Like the outlook was super good, Model 3 coming on strong, and then, Q1 was horrible and the stock tanked, and in June we hit $177. And personally, I got margin called because I had options and leverage, and that was a painful period of time.
I'm well aware.
Yes, as we've talked about.
I'm well aware.
I haven't talked about it
brought
as
it up once or twice.
Yeah, a little salty at times. It's tougher. It's tougher because I did have to sell some of my shares during that period of time to get out of the margin call, and because of that, now I have fewer shares than I would have at that point in time. Thankfully, like I stayed leveraged and still had options and things, so I was able to maximize my value on that return, but it's risky. And for us, like we're still relatively young, so the risk of loss is less. Like we still have a lot of earnings potential in our future. And I think we're both confident in our ability to earn more money. So that's why I think we have high risk tolerances versus somebody that's, later on in their journey and, they're looking to sort of maybe have a little bit less upside, but safer investment, in which case, stock and diversification start to make more sense. So it's just kind of different for everybody, but yeah, we've both been on that. So me personally, like I'm less options for me, maybe 5-10% of the portfolio pretty consistently. I think stock is over the long term generally the best bet because even if you know everything about the company, and that's why I trade options on Tesla. Like I would only do it on Tesla because obviously I'm here every single day looking at every single thing possible.
Information edge is real.
Exactly. But the problem is sometimes it's like too real in that you know too much and you think the market's going to catch on and they just don't.
Yeah.
They just don't get it for so long. Look at Tesla over the last 4 years. Like I've been saying this week, we're repricing and this isn't anything crazy if Tesla would have just slowly gained these prices over a few years. But the fact that it just happened so suddenly, then we look back in hindsight and it's like, oh, Tesla was overpriced in 2014 when it was like $280 a share. No, not really. It's just been underpriced since then.
Yeah.
And now even if you had bought at 280 in 2014, you still got a better return than the S&P 500, even though you had to wait 5 years for that to happen.
Yeah. The stock price basically was stagnant while Tesla went from a $2 billion in revenue company to $25 billion in revenue company.
Yeah, we were just talking about this on the podcast the other day. $3.2 billion in 2014, and we're going to do more than $32 billion in 2020.
Yeah.
So like 6 years, 10x, and the stock price is then 3x, 4x. So like that's very reasonable for that period of time. But the problem back to the options is like if you would have been playing options that whole time throughout, probably didn't, get that great of a return. And now if you happen to be in them, yeah, it's like amazing. It's incredible. But if you're consistently doing it, like you didn't hit great returns on those previous buys. So it's just a timing game, and the market can be really, really slow to recognize what you think you recognize, even if you are right. So you have to get like both the direction and the timing right, which is very difficult because there's so much psychology and stuff that goes into that. And
yeah, if you're trading short term, like one, you have to accurately predict how Tesla is going to perform as a business financially and the results. And then you have to predict how the market will react to that performance. And that's just like,
and it's so hard.
It's incredibly difficult. I don't think anyone at least can or should claim to be able to know
it's
how
always
to do
a gamble.
both those.
It's definitely always a gamble. So that's why for me, it's a small part. Like I'm very risk tolerant. I think we both are.
Yeah.
So we like to
way
maximize,
too much probably.
And we like to maximize our upside, and
yeah.
Options allow you to do that, but at a cost for sure. So it's just something you need to find a balance for. But yeah, that's kind of, so back to like where we started with like the FOMO is because you sold your position this week. So talk a little bit about that.
Yeah. So I think when I bought my options, it was after it got whacked. I bought 3 of them, probably like March, April, and June.
So basically that whole way down from like 250 to like 180-ish.
Yeah. So it was in like I want to say like 230 to 250 range. And then ended up selling. Basically, it depends what your goals are. And my goal was just like financial independence basically for like the next few years while I try to build and scale this thing. Right. And all of a sudden Tesla stock shot up to like 640 So when the stock
right after earnings, right?
Yeah. Yep. So when the stock almost triples in a short amount of time, when you have all of your money in those Tesla options, like it worked out too well. I didn't think it could have I wasn't expecting that.
Because even before the earnings report, the stock had already doubled, maybe 2.5x before that. We were in like, the 500 range, and we were having conversations about like, do you even continue to hold?
Yeah.
And I think when we first started that conversation, it was at like 400. And I was saying, well, it depends what we're at before earnings, because you were trying to decide if you wanted to sell before earnings or after. And
no, I was bullish about Q4 earnings.
Exactly.
Super bullish.
Exactly. Yeah. But like the stock had run up so far, so significantly already that it was still even a question at that point, even with you being bullish, and that goes back to the expectations being really difficult to, it's really difficult to assess what Wall Street is really expecting. And even though we try to go through the FactSet stuff and we try to go through all of, everything that we can to get a gauge for that, it's still always a guessing game. You just don't know.
Yeah. I was very bullish on Q4. I thought it would be a golden quarter with a free cash flow blowout. Free cash flow, street top 429 million, came in at $1 billion.
Yeah.
So I was really confident about that. What I wasn't sure about was, were they going to issue guidance around Q1, which I think is gonna come up short against what the street's anticipating. And then what were they gonna give for 2020 delivery guidance, which I thought the street was way too low on. So basically my thesis was around Q4, free cash flow, street's way too low. It's gonna be a blowout. Same thing with 2020 deliveries, a little uncertainty around Q1 guidance. But yeah, I definitely wanted that catalyst to hang on to that one.
Right. And what we were talking about at the time is there's just like so many different wildcards, especially with like the Q4 report, because of that guidance inclusion for such a long period of time, both the quarter and the year, where it's just like another thing on top of like what is actually the expectation out here.
Yeah.
Because like FactSet was like 468. So like, yeah, easy overachieve on that.
And then you've got like whisper numbers and
exactly. And it's like, what is the actual true expectation? I think that's what's difficult right now with the stock having shot up so far. Analysts, I don't think have had a chance to really react to that yet, to really give us a good handle on what the expectations actually are, which makes it even more tricky going forward from here.
Like, was it Facebook that beat recently and then the stock tanked?
I don't know, but it happens all the time. Like,
yeah. And that's where,
because you can beat on 3 out of 4 metrics, and then the fourth one, it's like, oh, well, sorry.
Yeah. Or the guidance comes in a little weak. But this is where we're talking about, like, I think there needs to be more transparency around this like Wall Street consensus number.
Which I try to do as much as I can, like with the Tesla numbers.
Yeah. It's just such a subjective thing, yet you see it on TV and it's like, here's the bar, these exact numbers. If they beat it, good for them. If they miss, they came up short and they should be punished. And it's like, what is this bar? How are you coming up with this? Because the weird thing is that, all right, it's a consensus, it's an average. What analysts are you taking? How many of them? And then the most interesting aspect is that the most bearish analysts on Tesla always submit the most bullish financial projections for the quarter.
Yep.
Because what they want to happen is they want that bar to be set as high as possible so that that headline says Tesla missed, stock plunges, all that. So yeah, I really would like some transparency around that, and I hope somebody works on that project.
Yeah. And that's another thing, especially with options too, is like there is manipulation in the market, and there's manipulation with Tesla for sure. Some people on Twitter had asked us to talk about a TMC post, I think by Fact Checking, who's a great poster on there. But it was kind of walking through basically what happened this week is there's speculation that when Tesla neared the peak at 369 or 900, still in the 300 range, $969, the volume at that point in time was pretty significant. And the theory is that, and we talked about this a little bit on the podcast, but if you're going to sell out of a long position, you're going to do that slowly so as not to upset the market in a way that causes a significant drop very rapidly. Mm-hmm. But if you're a short seller and you're trying to cap momentum, you can sell a significant amount of shares into the market to create that illusion of, a sell-off. And then you're starting to trigger all these stop losses that people have, especially in a circumstance where the stock has shot up so much, people are going to put stop losses on. That's just a natural thing to do from, people that are trying to protect the gains that they've gotten. So what you do is you sell a lot of shares in the market, and then, you start that waterfall effect of stop losses being triggered, and that kills the momentum. So if you're a short seller, like, it totally makes sense to do that, because you're going to stop that momentum, and then you can just buy those shares back at a cheaper price. So you'll sell them in, cause that waterfall effect, and then buy them back cheaper. Then you ended the momentum for the remainder of your short position too. So that's kind of the theory of what may have happened on, I think, Tuesday or Wednesday, whatever day that was. And then there was also a similar impact in one of the foreign trading markets, I believe, where in the pre-market or during normal session there in our pre-market, there was a similar thing of like just a huge sell-off to try to like get the stock to fall. And in the pre-market, the volume is lower, so it's easier to get the stock to fall.
Yeah.
And then it just sets the outlook for the day, because people wake up and they see like, oh, Tesla's down, 5-10% in pre-market. The rally is over, sell off. So I think that's sort of like what that post was, high level. But stuff like that does happen, and you can't really prove it, but like it does happen.
People are going to do whatever they're incentivized to do.
Exactly.
Yeah.
Exactly. So that's kind of an aside to what we're talking about, but like with the consensus estimates and stuff, like what you're talking about with those bearish analysts potentially setting those higher targets to create this, sentiment that the company is performing poorly, and then that can knock the stock price down. And then what can happen is potentially the actual trading side of that bank that's maybe issuing that price target can then go pick up shares cheaper, something like that. Like that's also, an incentive. There's supposed to be a wall between those two sides of an individual bank, but you see things like that, and it's very like, why would someone that's so bearish have the highest estimates on the street? Like, it just doesn't make much sense.
Yeah, it's what they're incentivized to do. And it's the same thing with like Tesla Q. If you can convince the public that the company, that Tesla's going to go bankrupt, or that there's accounting fraud, or that Musk is just a showman, then people typically believe what they read and hear.
And then you get scared of the stock, you get scared of the actual product.
Yeah.
And that can impact,
like,
and that can impact their sales, and then it can impact credit ratings and things like that, in terms of the sentiment. So that
people are scared to buy Teslas because they're like, how am I going to get these things serviced when the company goes under?
It can impact talent too. Maybe someone doesn't actually like, maybe an engineer that doesn't have the best grasp of like the financials of the business. Maybe they would be a little bit more nervous to go work for a company that, they read constantly is going to go bankrupt. Like, okay, maybe I'll just go work for Exxon because like I know that's safe, Yeah,
especially if you're like an Apple or Google, you can pay somebody through the nose with just cash versus
versus having to take the risk on the stock.
Yeah, Tesla, they need those equity options basically. And if you don't think the company is gonna perform extremely well and you're super talented, which is why you're getting an offer from Tesla in the first place, you just go somewhere else.
Definitely. So then back to like why you sold your options. Obviously the huge run up, Q4 was a big success as you expected. And then take me through where you go from there.
Yeah, it was a really difficult decision. I sold at like 640 basically. But
that was like the Friday after earnings, I think, right?
I believe so. Yeah, it was actually Thursday.
Okay.
So yeah, I missed out. The next 3 days, it went on an absolute run. So that hurt. It hurt a lot.
Up to 960 from 640. Like that's a huge, especially in options. Like that's huge.
No, and then you get FOMO the other way, and it's just like, man, it's really painful when you see it go like slow news day, Monday and Tuesday back to back, 20% increase each day, which is the largest single day gain in 6 years, and it happens back to back days
and largest dollar gain
right before, like right after you sell. So yeah, it hurt a lot, but at the same time, like it's all about your goals. And my goal was to get enough money for at least a few years of financial freedom, and I got that. So I was like, okay, what am I going to do? If the stock goes up from here, I've just got a bigger cushion that I don't necessarily need. If it falls back down for any reason, I don't have a crystal ball. Then all of a sudden I'm in a difficult position and I don't have that goal achieved anymore. So yeah, it was a tough decision, but I'm sticking with it, I guess.
Yeah, no, and that's
and
it's so hard to do.
Yeah.
And that's all, my biggest challenge whenever I have an option is like selling it.
Yeah.
And I pretty much just end up holding it till expiration, like every single time.
Yeah.
Because I always think that the time value on it is like not enough. So I just end up at expiration, and that Friday I'll like close it out. Yeah. So it's just, options are so tricky. But then, and then I think the outlook for Q1. So let's talk about that. We got some questions on that, because I think we both have, with how far the stock has risen, I think we both have some concerns about how Wall Street is going to react to Q1, because people might be in this, mentality of like, oh, Tesla's, they've hit this point now, and free cash flow is always going to be positive. Profitability is always going to be positive, despite Tesla's guidance that could change during periods of production ramp ups. But they may not be fully anticipating some of the headwinds in Q1, which is something we talked a lot about. So let's go through that.
Yeah, it seems like holiday quarter, the street always underestimates how well Tesla's financial performance is going to be. And then for the seasonally weak Q1, they're always overestimating how Tesla's going to do. They just don't understand like the ebb and flow of that Q4 to Q1 transition, in my opinion. And that's where like there's a lot of headwinds in Q1. And to be completely clear, 3 months from now, none of these things are going to make a difference.
Right.
None of them. It doesn't matter.
We're both very bullish on Tesla.
Yeah. So like unless if you are a short-term 1 quarter, 3 month period trader of the stock, like this stuff does not matter. But to the street, and you saw after that last terrible Q1, everyone just overreacts and panics, and it just becomes like a selling frenzy. And that's
then same thing with the waterfall and the shorting we were talking about earlier. Like,
like
you sell off. Yep. People
Yeah.
get out because they're worried about it, and it just snowballs. Yep.
Yeah. And that's when you need to get the most greedy, is when others are most fearful, and you just believe in the product, the leadership, the impact that they're having on the world, all the edges that they have over competition. But yeah, to get back to it, like Q1, there are plenty of headwinds, just to be completely real. I don't think it's going to hit the street's expectation, and that's fine. They just don't understand their business. So you've got like the incentive phase outs in the US and Netherlands, right? So the 1875 in the US, and then the Netherlands, it's like an increase in the tax from like 4 to 8% of the benefit in kind.
Benefit in kind. So like if a business buys a Model 3 or any Tesla for their person, those people have to then pay taxes on that as if it was income. And electric vehicles get a lower tax on that rate. But I believe this quarter it now doubles from 4 to 8%. So like effectively the payment you have on your employee given Model 3 doubles, which is pretty significant.
So basically, if you're in the market for a Model 3, you should have bought one in Q4.
Exactly.
The price just basically raised from a roughly 38 grand to 40 grand. And normally after an incentive phase out or federal tax credit phase out, Tesla will lower the prices by roughly like half of whatever the phase out is to try to offset that and keep demand up. They didn't reduce prices at all,
which is a good sign for demand.
It's
for sure.
It's an awesome sign. So that's where it's a Q1 headwind and an awesome sign at the same time, right? And like people aren't talking about Tesla going bankrupt, so that can be a boost. The stock price is high, so maybe Tesla investors are actually buying Teslas with some of their money.
Definitely.
And the interest is so incredibly high that, I don't know, the more awareness usually leads to more sales. So yeah, there's tax credit phase outs, but at the same time, like them not cutting prices and those other two, like it's a great sign for demand, which is the most important thing long term for sure.
Yes, absolutely agree. And I was just looking at Google Trends earlier today for another reason, but I noticed that Tesla was spiking up above, I think, Mercedes, BMW, Audi. Normally it lags, and this is worldwide, it lags behind those brands a little bit. It's catching up over time, but I think with all the interest that has been generated by the stock, if you just literally search the keyword Tesla, not even TSLA, I'm pretty sure Google is either projecting it to pass those or it already has passed those, at least for a short period of time here while everybody is talking about Tesla. And as you said,
fraction of the volume of vehicles sold.
Exactly.
Which is remarkable.
And as you said, that can lead into more people learning about Tesla and then eventually purchasing the vehicle.
Yeah.
Which is huge.
And then like deliveries, do you know what the expectation is? It's hard to find updated numbers.
So I always get the facts set like a couple days before we have the delivery numbers, and then a couple days before earnings. So I'll have to wait on that. But I think the last Q1 expectation, I could probably pull it up. Let's do that quick.
Yeah, but it seems like, okay, Tesla just delivered 112,000 vehicles in Q4. Now they've got Model Y ramp that started in January and China Giga. It seems like people are extrapolating those two ramps to think that they will exceed deliveries quarter over quarter. And I just don't think that's going to happen. And the breadcrumbs there, it's like Tesla just in their Q4 shareholder letter. So Q2 and Q3 shareholder letter, they specifically said we're going to sequentially increase deliveries. And then Q4, they took that out. So it's like, if that's not a pretty telling sign that it's actually going to decrease from 112, I don't know what is. That'd be weird to take that out and then have deliveries increase, right?
Yep, 100% agree. And this is something that historically I've always been like laser focused on, like how Tesla communicates things. Because they do communicate things, it's often just very subtle.
You gotta interpret,
Yeah, and you need to be paying really close attention. But when Tesla does remove something like that, like it's definitely worth paying attention to historically.
Yeah. So not only like weak seasonality, but on top of that, and we went through this, but we were looking back the last like 7 or 8 years. Tesla has never delivered more vehicles than they have produced in a Q1 in their history ever. So that's another thing.
So why would we expect that this quarter? It would have to be Model Y in Shanghai.
Could it happen? Sure. Yeah. But like based on history, likely not. So that's where also that impacts the free cash flow and profitability. So we had a free cash flow blowout because Tesla delivered 112,000 vehicles and only produced 105. That's a $7,000 swing, or 7,000 vehicle swing. Say 50,000 ASP, that's 350 million of extra cash. Now, if that swings the other way, not only do you get rid of that 350 million, but now it can go the other way. So the difference can be half a billion.
Yep.
Yeah.
For sure.
And people don't like, does it matter? It all smooths out. Over the long term, it doesn't matter at all. But people really think that it's a good idea to evaluate businesses on just 3-month span, every 3 months.
1 3-month span. That's seasonally weak with headwinds that we talked about. Yeah. So I pulled up the FactSet consensus. So Q1 as of January 27th. So right before earnings, though we did have the delivery numbers from Q4, obviously at that point, it was 108,000, which is pretty high. I mean, that's
When was this?
This is January 27th. So, a week and a half ago at this point. And I'm sure things have come up a little bit just as the stock has run up. People are going to adjust their, models to be in the same ballpark as the stock. But that's a pretty high expectation where if Tesla produces 115,000 and they grow their inventory again, 8,000 vehicles, like you could already be below that consensus. And then as we were talking about earlier, who knows how well that actually represents what Street expects in terms of deliveries or in terms of the financials. If people are expecting free cash flow positivity going forward and there's this $500 million negative swing, plus then Tesla has, maybe they have cash outlays for Model Y, maybe they have cash outlays for Shanghai, then you can easily be in a situation where we swing from positive $1 billion to like neutral or maybe even negative. And we haven't modeled that out, but the point is that there may be risks to expectations based on people not fully understanding how the delivery variance and production variances impact the free cash flow.
Yeah. And then you've got the finished vehicle inventory. So quarter over quarter, it went from 17 days worth of inventory to 11, which is the lowest in
4 years, I think they said, something like that.
Yeah. So that's where it's like, okay, is that just the new standard? Or are they going to build inventory back up because they were literally selling showrooms out and you couldn't find any inventory online, all that stuff. So that's
right, because that's about 15,000 vehicles essentially is the 11 days. We count that
versus
out.
22.
Right, and that's
22,000.
And if you think about that, like Tesla could realistically have, maybe not all of that on boats, but a significant portion of that on boats or, on trains going wherever, trucks, wherever. Because as you said, showroom's empty, inventory empty. So like the cars are somewhere, but they're probably just in transport.
Yeah. So if you're building those inventory levels back up from 11 to 14 or something, now all of a sudden you're manufacturing even more vehicles than you're delivering. And just looking at this FactSet numbers, like Q1 is 108, Q2 is 120. Like, I think it'll be less for Q1, more for Q2, right?
Yeah, because
So
at that point,
they just
Model Y
smooth it
and
out. They
Shanghai.
just don't understand like the ebb and flow. They don't understand the variance, and they underestimate impacts, positive and negative. It seems like with the stock.
Right. Because I'm trying to think back as we're saying this, like Q1 to Q2 last year, there was like, and there were some headwinds that Elon talked about on like the Third Row podcast with, I can't even remember the country, but you know, one of them, and they couldn't even like deliver the cars they had shipped there or something like that. But anyway,
The Belgian port.
yeah, something like that.
Strike, yeah.
Exactly. Yeah. So last year we went from 63,000 deliveries in Q1 to 95,000 in Q2.
Yeah.
So a 50% difference,
32,000 vehicle swing.
Yeah. And then you have what,
Yeah.
12,000 here, 108 versus 120 in terms of the expectations, like a 10% difference versus 50% last year. To your point, like all you need to do is look at these things and it's like becomes pretty easy to understand what's going to happen, but people just don't. And then
it's high level
perceived
smoothed
as,
out.
yeah. And then it's perceived as a miss for no reason.
Yeah. And then like Model S and X bounce back in Q4, 20,000 units. That's high ASPs, the highest profit margin or highest gross margin. So what's going to happen there after when Elon goes on the conference call and says that the Plaid powertrain that's coming into Model S and X later this year is alien technology, and it's insane.
And that he didn't even think it was possible to do.
Yeah. So like if I'm in the market, just think about what that's incentivizing people to do. If you're in the market for an S and X, he's basically telling you hold out for this awesome alien technology. I don't know why you would buy at that point. And it's seasonally weak Q1. So it's like, how much is that 20 going to fall? I don't know. And then on top of that, you've got two ramps happening simultaneously in the same quarter. Model Y at Fremont and Model 3 at Giga Shanghai. And they've said over and over again, we're going to do really well, except when we're ramping new products, which is completely reasonable.
Yeah, absolutely. Because that's what Tesla was doing historically for years. Like,
exactly.
It was just and now we're just compacting that into like a couple quarters.
If you looked at their cash burn over their entire history, it was like Model S, Model X, Model 3, right? So it's just during those ramps, you burn money, and then as soon as you ramp to scale, not only do you stop burning money, but you start recouping that investment and you start getting rewarded for it. So this is normal. They're ramping 2 new lines because they have so much demand. It's an awesome thing. But short term, you're going to get punished for it financially over a 3-month period. It's not going to look great. It's fine.
It's a good thing because Tesla's able to do this more quickly now than they were in the past because they have more capital. They have, you know, that confirmation of demand. They have this built out product line now where they can do a couple products at once with Model 3 Shanghai and Model Y, and then eventually we'll have the Semi, Roadster, Cybertruck. You know, those 3 kind of coming online around the similar time. So it's a new era, but there's still going to be the same thing that we went through. They still need to go through those things again, and they're going to do it a lot more efficiently now. They've talked about that a lot with the capital efficiency of both Gigafactory Shanghai and Model Y, but it still is a product ramp, and it still is costly short-term, profitable long-term. It just, you have to get to that long-term.
And then you've just got the coronavirus as just like a wild card. And if it's shut down, does that mean you get punished less because you're not ramping?
Well, the profitability per unit is going to be lower, but you're going to have fewer units, so maybe the actual impact to the total profitability might be less.
And hit you a little harder in Q2.
I don't even know on cash flow, but yeah, you're going to get to profitability slower, but it might be a less of an impact in Q1 potentially. But I think that's, you know, a 1 or 2 week swing within a quarter is probably not going to be too significant at the total, I wouldn't think, which is nice because now Tesla has these other business lines that are operating where they can afford to have those periods of time. Whereas like if Model 3 Gigafactory Shanghai was their only product line, like it would have been with Model S, and you have a 1 or 2 week shutdown, like that's significant. Yeah. That's 15% of your quarter right there. And now, you know, it's this small relative to Tesla's total because they're going to be shipping, you know, however many tens of thousands of vehicles, which is awesome. Yeah.
So my gut says that there will be a better entry point for Tesla after Q1. But I feel like people should be expecting that. It should be factored in. It's crazy to me if it wouldn't be. So ideally it would be like, okay, the street sets the bar too high for Q1. they come up short. Business is still extremely strong. It's just all short-term stuff. They're going to be fine. Get in, and then all of a sudden, like, you've got plenty of catalysts to look forward to. You've got Model Y ramp, China Shanghai ramp with Model 3. You've got S&P 500 induction potentially
probably
after
sometime
like Q2.
later this year. Yeah, probably not Q1 anymore, but probably happens in Q3, I would guess.
Yeah.
If not, happens in Q4.
You've got full self-driving feature complete potentially happening, or at least progress. You got the Fiat Chrysler money, which is just pure cash, pure profit.
Yep, so those should start this year. We don't know the exact details of that contract, but that should be a significant boost to Tesla's financials.
Yeah,
which again, people should expect, but probably aren't factoring in too much.
Yep, and then you've got Battery and Powertrain Investor Day in hopefully April, probably 420. And
it's got to be 420.
Yeah, and then like maybe Plaid by the end of the year.
Yeah.
Like that's a lot of catalysts, and all of a sudden like Q2 they bounce back, Q3 and 4 they crush. So they're going to have an excellent year, but people are overestimating like how much impact there is quarter to quarter from Q4 to Q1.
Yeah, especially with just how high it's risen lately. Expectations just, as high as they've been.
Yeah,
so.
Exactly.
All right, so we've got, I think, just a few minutes left here. Let's touch on Model Y efficiency. I think that's a big one. You just updated your core efficiency table with the Model Y, and it is on top now.
Yeah, so it's at 5.2 kilowatt hours per 100 miles of range and 1,000 pounds of weight, which is the best of any electric vehicle currently in production. Formerly, the long-range Model S was on top at a 5.5, so significantly beating it, which is a little crazy given like the increased frontal surface area and slightly worse drag coefficient. So we're trying to figure out what's going on there.
Yeah. And we've been talking, I'm laughing because we've been talking about this like a ton off camera, but one of the theories we had tossed around was like, Elon had mentioned in the Third Row interview them wanting to move away from the module battery setup design into just cells and packs. So we're like, okay, is it, maybe they took the modules out of the Model Y, but then we kind of went back and listened to the interview again, and he really says like they're trying to get there. So I think we've come to the consensus that it's probably not happening quite yet for Model Y. So then it's like, all right, well, where did the other efficiency gains come from? And my perspective is it's just a lot of little things that they're changing over time and integrating into the Model Y, since that's a new product. So they have the opportunity to, change the production process to integrate some of those learnings from Model 3. Mm-hmm. And I think it's just a lot of those little things coming together to drive, the efficiency gains that we're seeing. And I'm guessing they were lowballing when they originally gave their estimates of 280.
Also, when I first did the Model Y, they had the weight listed on the website. Now they took that off.
It's gone.
So we're just talking about that, and we're like, okay, our gut says that means the Model Y is going to come in lighter than anticipated, which would actually raise the core efficiency from 5.2 to something close to the Model S. And then to close that gap even further, the Model S, they're sandbagging. Not 370 miles, not 373. It's more like something like what, 383?
Somewhere in the 380s, I think, was all Elon said.
So that would bring it down to like a 5.3, which would all but close the gap with the Model Y core efficiency.
Yeah.
Yeah.
Cool. Let's see if there's anything. We have like 2 minutes here, so let's see if there's any other topics here. Anything on Gigafactory Texas you want to talk about? We haven't really talked too much about that.
Cybertruck, and then maybe it'll make it easier to ship abroad because you don't have to go through the Panama Canal. That's the theory.
Which is interesting because they won't need to do as much of that with Gigafactory Berlin once that exists, because they can fulfill a lot of the European demand directly from there. But we don't know exactly what product lines Tesla would build in Gigafactory Berlin. So, Cybertruck demand in Europe's not going to be as extensive as the US, obviously, but for the small amount that does go to Europe, if they build it in Gigafactory Texas, if Gigafactory Texas becomes a thing, then they would have the benefit of not having to go through the Panama Canal like they would from Fremont. So I think that is a big advantage. The other big advantage that I think we wanted to touch on here, just with like the Gigafactories coming up online, is just the massive benefit that Tesla's going to have logistically, because right now they do the quarterly waves. And this was another one that somebody had asked us to talk about on Twitter, is when we'll see that unwind and if Tesla should start doing that now. My perspective on that is that Tesla's going to keep doing that until they have these Gigafactories up and running, at which point they can naturally unwind it. because Elon was talking about this again, I think on the Third Rail podcast, where they need to actually change a lot of things production wise for those different international configurations.
The
you have like the stickers, all the
headlights.
different languages. Yeah. It's different certifications you need to meet. So right hand drive. So it makes sense to batch those things, and from a production process standpoint, as well as from the delivery standpoint, because then you're shipping and you can, deliver them all within the same quarter. So you don't have that overproduction, under deliver free cash flow impact that you would see if you've got a lot of stuff sitting on boats at the end of the quarter. So if Tesla were to shift to that and unwind the wave early, that would be a negative impact short term. The stock would probably fall. People wouldn't understand it. So they have the benefit of the financials looking better and the benefit from the batch production. So I think we'll see that wave. Tesla had talked about trying to unwind it, but I think it'll just happen naturally as these new gigafactories come online.
Well, and it's more expensive, just like any 2-day shipping versus like 4-day shipping. It's a lot more expensive, and then all of a sudden at the end of the quarter you have to like hire more people in order to execute, and then you've got to let them go. It's just really inefficient across the board.
Yeah.
So yeah, once they
it's
can
like
unwind
painful
that,
for customers too.
Yeah, so that's some more upside for their financials and efficiency once they can unwind.
Yeah, which is definitely an underappreciated factor, I think, once that does happen.
Yeah.
Yeah. All right, let's see. Starlink IPO. So we just heard the news on that. I think somebody had asked about it. We haven't really had much time to look into it. I mean, we're both super excited. We, obviously big SpaceX fans and have a lot of interest in the company.
Yeah. We're trying to get in.
Yeah, trying to get in. Hopefully that'll happen. Starlink IPO. I'm excited, but we'll definitely, I think we'll probably circle back on that one at some point.
For sure.
Cool. All right, Matt, you want to tell people about what else you got going on? We talked about Toom a little bit.
Yeah, so this is Toom. It's Lebanese garlic tip. So we launched 8 months ago with Whole Foods, 8 states Midwest. So we got Illinois, Indiana, Iowa, Minnesota, Missouri, Michigan, Nebraska, and Wisconsin. Follow at Toom Dips, TOOMDIPS on Instagram. We're actually going to be doing a giveaway. So 3 people that tag 3 of their friends and follow at Toom Dips, we will ship them one of each of these flavors within the next 5 days.
Am I eligible if I follow with the Tesla Daily podcast Twitter or Instagram account?
No, because these are yours. I'm gonna leave these
all right.
here.
I already won.
You already won.
Awesome.
So 4 people.
Yes. Awesome. No, for real though, it's awesome. I'm not even a big garlic fan, but I love the dip. It's
awesome.
Amazing. All the flavors. It's all right. Cool. All right. Always a pleasure to have you on. Thanks for coming on, Matt.
Thank you.